another sector where the momentum has been strong for the last 2 years is defense. In fact, BEML is one of the big winners of 2023. The stock has more than doubled in the last 1 year. The company has orders worth 329 crore rupees from the Defense Ministry. In fact, the Defense Secretary, while speaking to CNBC-TV18, said that production is likely to cross 1.5 lakh crores in FY24. To discuss the opportunity, we have Shantanu Roy, the Chairman and Managing Director at BEML. Shantanu, thanks for being with us. Happy New Year to you. And, you know, it's been a super run for the sector. We were just having a chat with the management of Paras Defense, and he said that this so-called number of $77 billion annual spend by the Indian government in defense is conservative. He's saying that the spends could be much more in the year to come. I wanted your thoughts on what the opportunity for BEML is over the next 1 to 2 years. Can you share some numbers with us? What's the order book now, and what is the order visibility over the next couple of years?
Very good morning and a very happy new year to all of you. Yes, there has been a lot of good opportunities for companies like BEML in the manufacturing sector, especially because we are in the defense and rail and metro, both the verticals. And these are the priority areas of the government. As far as defense is concerned, we are very optimistic about the overall manufacturing scenario of defense production. As far as BEML is concerned, if I talk about the order that we have just got, it belongs to a family of the mining and demining equipment, which is very essential for our defense forces. And it belongs to the family of the combat engineers, which includes the bridging systems. And we are, it's one of our core competencies. This product itself, I mean, this family itself, I'm looking at a number of around 2,500 to 3,000 crore in the next 4 to 5 years. The overall defense order book that I can see, the defense opportunities in which BEML is present for in the next 5 to 7 years should be around 30 to 40,000 crores for BEML alone. And if we talk about the other verticals, the rail and metro, put together in the near future, we should have an order book. We should have an opportunity size of around 40-45,000 crores in the next couple of years, if all goes well. So that augurs well for the company. And we also have the third vertical, which is the mining. And mining, it's very steady, it's very constant. And mining has always contributed the baseline to the company's top line. And last year, mining contributed 50%. This year also, I'm expecting it will contribute around 40 to 50% of the top line. And mining will always have a steady growth because, again, the government's policy and aspiration to go for indigenization of the high-end mining equipment, where we are very strong. So it augurs well for the organization.
Okay, so just wanted to clarify some numbers. You said 30 to 40,000 crore is the opportunity in defense orders over the next 5 to 7 years, correct?
Yeah.
Okay, and for FY24, your order book guidance, you had cut it to 14,000 crores. You had said that some orders are getting pushed out. Is that a number that you hold on to? And what is the order book guidance for FY25?
FY24, I'll still maintain 14,000 crore. You see, right now, my order book is around 12,500. We are expecting around 3,500 crores in the next 3 months. So we will execute some of those. So we will end the year at around 14,000 crore. And if all goes well, FY25, we should end the year at least 20 to 25,000 crore of order book.
Okay. Mr. Roy, you know, since import substitution, Make in India indigenization has been such a big theme for players like you, can you tell us that earlier in the spaces that you operate in, what was the extent of imports and what does it currently stand at?
The impetus on indigenization has really been very helpful for companies like us, not only in terms of increasing our top line, but also at reducing our costs. Earlier, if we talk about defense, the indigenous content was only around 60 to 65%. But now, with the indigenization impetus, we are able to achieve around 95% indigenization in most of our platforms, most of our products. As far as the rail is concerned, in rail, already we are at levels of around 80-85%. In metro, yes, it's a bit low, around 65%, depending on the type of requirement of each metro corporation. But as far as mining and construction is concerned, we are more than 90% indigenous content in that particular vertical. So definitely we have come a long way from being importing to indigenizing and creating a supply chain in the country to cater to our requirements.
Okay. Mr. Roy, hi, good morning. Season's greetings. So big numbers there on the order book position and, of course, the opportunity, right? But I want to come down to revenue and execution, because when we talk to people in the stock market, I mean, everybody really cheers the huge ordering that's happening. But people are also concerned about how quickly that starts translating into revenue and profits. And if I look at the historical track record, then, it's not been a straight line growth. Because in FY22, your revenue was above 4,100 crores. In FY23, dipped a bit to under that number. First half of this year, you've done, I think, just under 1,500 crores. So what kind of a pickup in execution can we expect in the second half? And when you talk about this opportunity, big ordering opportunity, in terms of even an annual revenue run rate over the next couple of years, what's a steady state run rate that investors can perhaps expect?
You see, let me talk about the historical data, the historical performance. Historically, our execution has been like 10% in the first quarter, 20% in the second quarter, 30% in the third quarter, and 40 to 50% also in the last quarter. That is how historically we have been doing. As far as the execution, as far as the run rate is concerned, you see straight away the execution cannot happen in most of the orders because there is a gestation period. Except in mining construction, where we have a very short turnaround time of maybe 5 to 6 months in most of the orders. In rail, the gestation period, rail and metro, it is around 24 months to start with, when we build the first proto and then we start the manufacturing. In defense, it is a bit shorter as compared to rail and metro. So immediately execution definitely cannot be done. So we have to focus on the orders that we already have for the execution to take place for the next year. So it will not be, yeah.
So absolutely, I get that point. I get that point. That is the nature of the business. But then you have an order backlog, right? And that's why it'll help if you can give us some sense on, at an annual level, like FY24, for instance. Do you think you can end with 5%, 10% top line growth? And just a word on margins as well, because that's something that investors have really liked. Your margins have been consistently improving. So perhaps some guidance on whether you can maintain these levels of about 9% or not. And just top line growth this year, FY24, what could it be?
FY24, you see, we have targeted a 20% growth. And
in revenue.
It seems possible as I talk to you. FY25, we will again target 20 to 25% growth, our top line. As far as the margins are concerned, if you look at our half-yearly results, we have already reached an EBITDA margin of around 7%. So I want to end the year with at least 200 basis point growth over last year's EBITDA, which was around 9.3%. So that is the outlook, that is the aspiration that we have. All goes well.
Got it. Okay, so 20 to 25% growth in FY25 is what you're looking at. Before we let you go, we have the big union budget upon us. Of course, this time around, it's only going to be a vote on account. But the government has its sights set on growing the, defense sector quite a bit. So from the budget, either this time or post the elections, what is your key expectation? What are the, gaps that still need to be filled in this sector?
As far as BEML is concerned, the key expectation is that this impetus on defense spending and infra spending should keep going because the top three budget outlays for 23 was defense, rail and metro and infrastructure. And these are the three verticals, these are the three areas which I call the sunrise sectors where we are in. And we'll be hoping that the government keeps up the same momentum in these three sectors so that it augurs fantastically for companies like BEML.
All right, sir. Thank you very much for joining in. By the way,